Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 19th. I'm going to take just a brief minute to discuss what markets did last week as the equity markets recovered almost everything from the week previous and the big sell-off that you saw there, with the S&P 500 finishing the week up 4.02%. A great week to the upside. The mid-cap index not up as much, but still up a very respectable 3.23%. And the small caps, as measured by the S&P 600, were up 3.5% on the week. And as we came into this week, markets were very muted, understandably so. We had a big Federal Reserve Bank meeting this week where we were going to find out for the first time in years if we were going to get a Fed pivot from the interest rate hiking and then restrictive monetary policy, or are we going to start seeing the Fed start cutting rates to remove some of the restrictiveness from the policy and get back to the neutral rate of interest rates. And so markets were very muted going into that. We saw all of that, and then we got to the meeting, and most people were betting going into the meeting that we were going to see a 25 basis point cut. However, Jay Powell came out with the announcement, that's the Fed chairman, at 2 p.m. that they had cut by 50 basis points, or 0.5%. You saw the markets, again, a very volatile reaction, something that we've been talking about that you would see. Up, down, and the market ended up down 0.25% or so on the day yesterday after the press conference. But it really surprised markets that they cut the 50. So we fast forward to today on Thursday the 19th, and you're seeing the markets rally off of this news. You're seeing the S&P at its highs today, up over 2%. Now, volatility, as we talked about and we were expecting this since August, goes both ways. It's not just a downward phenomenon. You can have upward volatility where you have drastic moves to the upside, where you have these big swings, you have these big days in the equity markets on the upside. And again, as we just saw, we went 2 weeks where we were down 4% and then up 4%. So we're doing this back and forth, but you're seeing very big moves in between that. And so now investors have to say, okay, now that we have the 50 basis points from the Federal Reserve, what does that do for the economy? How does that move things forward for us as the United States? And what type of reaction is there? An immediate reaction? How does it impact the economy? And so let me explain it this way. As the Federal Reserve Bank starts tightening interest rates to slow the economy, imagine it like you're pulling a string and you're pulling it tight and you're holding back the economy from moving forward. But as you start cutting interest rates, it's like pushing down on that string. So it's not as easy or as simple, and you have not everything moving forward all at one time. And why that is then you have the consumer say, interest rates are down 0.5%, but I think, the Fed said they're going to cut another 0.5% this year. I'm just going to go ahead and wait on that purchase till the interest rates are blank. I'm going to wait to do this until mortgage rates have hit this number instead, because I don't want to buy here if I know it's going to come here. So you don't have an immediate economic effect, just like you don't have an immediate economic effect when you raise interest rates. There is a lag. So expect that lag to continue. You're not going to more than likely see a great number of job reports in the upcoming months. But what this 50 basis points does is it gives the consumer and the economy good news, and it gives a sense of optimism that more good news is coming on the side of interest rates being lowered. And to put things into historic perspectives, even though we look at these rates as very high rates, historically they're not high at all. They're still on the low end, even as the Fed continues to bring these rates down. So if you have questions about how to navigate this time, expect the volatility to continue. We've laid out the path of how to navigate the volatility, but expect it to continue for here through the election period. So if you have questions about how to navigate that, we'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.